Here's a summary of Costco Wholesale Corporation's Cost Q3 2025 earnings call transcript, designed for clear and concise delivery. Introduction. Today, we're reviewing Costco Wholesale Corporation's performance for the third quarter of fiscal year 2025. We'll cover key financial metrics, management's outlook, and important takeaways from the call. Please note that forward-looking statements made today involve risks and uncertainties. CEO and CFO opening remarks. Ron Vachris, CEO, highlighted the company's strategic growth with the opening of 9 new warehouses in Q3, including significant international expansion in Australia and Japan. He expressed confidence in opening another 10 warehouses in Q4, bringing the total to 914 globally. Vachris emphasized the team's strong performance in maintaining competitive pricing despite a challenging macroeconomic environment. He pointed to initiatives like extended gas station hours and reduced prices on key items like eggs, butter, and olive oil as drivers of increased member value. The CEO also noted the continued outperformance of Kirkland's signature brand sales, up approximately 50 basis points year-over-year, and the company's agility in mitigating tariff impacts through rerouting and local sourcing. Investments in digital and technology, such as the Buy Now, Pay Later offering with Affirm, were highlighted as crucial for future growth and enhanced member experience. Gary Miller-Chip, CFO, provided a detailed financial breakdown, emphasizing strong sales and margin performance. He mentioned the positive impact of a LIFO charge and a catch-up accrual for employee vacation days, along with foreign exchange headwinds on operating income. Key financial metrics. Q3 2025 net income, $1.9 billion, an increase of over 13% year-over-year. Diluted earnings per share, EPS $4.28, up from $3.78 in Q3 last year. Net sales, $61.96 billion, an increase of 8% year-over-year. Comparable sales, excluding gas deflation and FX total company, 8% increase. U.S., 7.9% increase. Canada, 7.8% increase. Other international, 8.5% increase. E-commerce, 15.7% increase. Traffic/shopping frequency, increased 5.2% worldwide and 5.5% in the U.S. Average transaction/ticket, worldwide, adjusted for gas deflation and FX 2.7% increase. U.S., adjusted for gas deflation and FX 2.3% increase. Membership fee income, $1.24 billion, an increase of 10.4% year-over-year, 11.4% excluding FX. The recent membership fee increase represented approximately 4.6% of fee income. Renewal rates, as of Q3 in U.S. and Canada, 92.7%. Worldwide, 90.2%. Note, some volatility due to digital signups and promotions like Groupon. Paid household members, 79.6 million, up 6.8% year-over-year. Paid executive memberships, 37.6 million, up 9% year-over-year, representing 47.3% of paid members and 73.1% of worldwide sales. Gross margin, reported rate was 11.25%, up 41 basis points year-over-year, 29 basis points excluding gas deflation. Key drivers included strength in fresh departments, lower commodity costs, dairy, butter, eggs, olive oil, and improved margins in gas and e-commerce. Selling, general and administrative, SG&A, expenses, reported rate was 9.16%, higher by 20 basis points year-over-year, primarily due to investments in employee wages, partially offset by sales leverage. Capital expenditures, Q3 approximately $1.13 billion. Full-year CapEx is estimated to be a little over $5 billion. Highlights: strong net sales and profit growth, demonstrating robust performance in a challenging environment. Compelling value proposition, continued investment in price, with lower prices on key items and strong Kirkland signature performance. International expansion, successful opening of new warehouses in key global markets. Digital and technology investments, launch of Buy Now, Pay Later, with a firm and ongoing efforts to improve the e-commerce and in-warehouse member experience. Gross margin improvement, driven by fresh departments, lower commodity costs, and ancillary businesses. Membership growth, continued strength in paid household and executive memberships, with high renewal rates. Agility in tariffs, proactive measures to mitigate tariff impacts through rerouting and local sourcing. Lowlights/challenges, LIFO charge, a $130 million LIFO charge in Q3, compared to a credit last year, negatively impacted reported margins. An additional $40 to $50 million LIFO charge is anticipated in Q4. Employee wage investments, increased SG&A due to investments in employee wages. Foreign exchange headwinds, negatively impacted the translation of international net income and sales. Renewal rate volatility, fluctuations in renewal rates due to the inclusion of newer digital members and promotional signups. Macroeconomic uncertainty, ongoing concerns about tariffs, and the general economic outlook remain unknown factors. Management's forecasts and outlook, warehouse openings, plan to open 27 new warehouses in fiscal year 2025, including 3 relocations, for a total of 24 net new buildings. Q4 warehouse openings, 10 new warehouses planned for the 4th fiscal quarter. Full-year CapEx, estimated to be a little over $5 billion. Future inflation, fresh and food/sundries inflation remains similar to the prior quarter. Low single-digit inflation returned in non-foods, primarily driven by imported items. Future LIFO charges, an additional $40 to $50 million LIFO charge is estimated for Q4, assuming current inflation rates persist. The total estimated LIFO charge for the full year is $145 million. Significant risk factors, tariffs and trade policies, evolving tariff landscapes present ongoing complexity and challenges. Macroeconomic conditions, general economic uncertainty, and consumer spending behavior. Supply chain stability, while generally stable, shipping delivery dates can be less predictable. Foreign exchange rates, fluctuations can impact financial results. Competition, maintaining price leadership and competitive advantage. Most important statements, CEO Ron Vachris. In times of consumer uncertainty, our Kirkland signature brand is uniquely positioned to provide our members with great quality and great values. And our results in recent quarters have reinforced for us that in uncertain times, our values resonate with members as strongly as ever. CFO Gary Millerchip. Net income for the third quarter came in at $1.9 billion, or $4.28 per diluted share, up more than 13% from $1.68 billion, or $3.78 per diluted share in the third quarter last year. And we continue to remain agile as the situation with tariffs evolves, while also supporting the commitments we have made with our long-term suppliers. In summary, Costco delivered a strong third quarter with significant growth in net sales and earnings, driven by a sustained focus on value, strategic warehouse expansion, and continued investment in digital capabilities. While facing headwinds from LIFO charges and FX, the company demonstrated resilience and a proactive approach to navigating the evolving macroeconomic landscape, particularly concerning tariffs. Management remains confident in its ability to deliver value to members and shareholders.